welcome to Chart Engineers. This is going to be the first lesson of the syllabus, and today we are going to cover market structure and how to use it on the chart. So to start off, we're going to have swing points, and all it is it shows a turning point in the market. And also liquidity can reside above and below these points. However, we will go over that in the next lesson. So to start, we have a swing high, which consists of a 3-candle pattern where the middle wick is the highest. However, there is one exception that I will go over after. So if we look at this example here, candle 1, candle 2, candle 3. On candle 1, we can see that this wick is lower than the wick on the right. And then if we look at candle 3, we can see that this wick is lower than the candle on the left. So the middle wick is the highest. Wick 2 is higher than 1 and 3. And it creates this point in the market, and also shows, again, a reversal point. So now, next we have a swing low, which is just the exact opposite of a swing high. It's again a 3-candle pattern where the middle wick is the lowest, and if we look, candle 1, candle 2, candle 3, wick 1 is higher than wick 2, and then wick 3 is higher than wick 2. So again, it creates this point in the market. And also, just to note down, whether the candle is bullish or bearish, it doesn't matter. As long as the second wick is the highest or the lowest, we will have a swing high or a swing low. And again, the length of the wicks also doesn't matter. As you can see, these wicks here are much longer than these wicks here. However, the middle wick is still a swing high and a swing low. So now here is the exception I was talking about. As we can see, we have 1, 2, 3 candles in the middle, and the highs on them are the exact same. So in this case, I would treat these 3 candles as one collective swing point, if that makes sense, as the candle on the left and the right is still lower and lower. And again, it creates this turning point in the market. And then again, the same for a swing low. These 2 lows are the same, and then wick 1, and then in this case wick 4 are both higher. So again, it's creating this turning point in the market. We could have like 10 candles in the middle. It wouldn't make a difference as long as all the lows are the same, and then the candles on the ends. So wick 1, then in this case it would be the last wick. As long as they are higher, I would treat all of these as one swing low. So now we're going to go over some market structure theory. As we can see, the market is trending up. However, it did not just go up in one straight line. It had, retracements before expanding back up. And all this is just how the market will generally move. And it's preferred when the market can retrace deeper into our other swing lows. So this here would be a swing low, swing low, swing low, swing high, and swing high. The deeper it comes in, it sort of scares people out of their positions if they're buying here, and then as they're closing their positions, that's going to be your institutions buy in to send it higher. And then again, prices now come lower, and then retracement, lower, retracement, lower. And then again, the deeper the retracement, the more scared that these people get in their positions, just for the institutions to start selling it at higher prices. And now here we're going to see we have our MSB, which it just stands for market structure break. And all this does is it shows me that I'm going to get a continuation in that direction. So every time there's a market structure break, I anticipate the market to continue in that direction. And now, as we can see here, market structure break is lower, so I expect price to continue down, and that is what we get. So now I will just label this as high, low, and then we have our market structure break here, so that's going to create a higher high. And if we get a higher high, we can anticipate the market will come down and create a higher low. And for us, all that is a buying opportunity. So as we can see, higher low, and then once we anticipate the higher low, we can anticipate a higher high. And then again, anticipate another higher low for a buying opportunity for a new higher high. And then in this case, we broke structure lower, so it's gone from an uptrend into a downtrend. So if we get a lower low, we expect a retracement for a lower high for a potential selling opportunity. And then once we have our lower high, we can anticipate a lower low, and that's what we have here. And then again, market structure break, lower low, anticipate the lower high, another selling opportunity, and then the market's continued lower. So now this is how I'd mark it out in real time when trading. So as long as you go back like maybe a few weeks to a month, you should be able to take any swing point from the chart and then just get to where your current market structure levels are. So in this case, I would have that as my market structure high. This is my market structure low. As we can see, when the market has closed above here, that is going to be our market structure break, and then our new swing high comes up, as this is the next swing high after our market structure break. And then to get our new market structure low, that is just going to be the low that created that high. So if we go to this high and we look left, it's going to be this is the low that created that high. And then again, here we have the market continue lower, so this is going to create a lower low, and then the next swing point after the market structure break would be our new market structure low. And then as we can see here, market structure break, new swing low. And then to get our new market structure high, we would look for the swing high that created this swing low. So if we go left, it's simply going to be this here, as this wick is higher than the one on the left and the one on the right. So this swing high is our new market structure high. And now if we continue, we're going to expect, as we've just shifted into a downtrend, we're going to expect the market to retrace up for a lower high, and then the market to continue lower towards our market structure low. As we see, the market has retraced up and started trending lower. And then what we see here is the market has just wicked below. Note how it didn't close below, all it did was wick below, and then that gave us a bit of a reaction to push up. However, we did then continue that back down, and then here we closed below again. So our new market structure low would be the swing low after this market structure break, and then that's going to be this same candle here. So then if we look, market structure break of that low, and then this is our new market structure low. And then to find our new market structure high, is simply going to be the high that created that low. So if we go left, it's going to be this candle here, as this wick is higher than the one on the left and the right. So this is our new market structure high. And then again, we're still in this downtrend. And now we've pushed up. As you can see, we closed above our previous market structure high, and all that shows is we're now in an uptrend. So we're going to anticipate a new higher high, which is now going to be this candle here, as this is the next swing high after we closed above our old structure high. As we see, this middle wick is higher than the one on the left and the right, and then here we have our market structure break. So again, expect a retracement before a new higher high, as the market is now shifted into an uptrend. As we see, the market's retraced down and then decided pushing up. And again, if we look here, we wicked above the high, small reaction pushing it lower before the market continued higher. And then again, here is our market structure break on this high here. So then we're going to get our new market structure high on this swing high here, as this is the one after the break. See, the middle wick again is the highest. As we see, market structure break, and then now we need to find our new market structure low. So our new market structure low is simply going to be the low that created that high, which would then be this candle here. So again, we're still in this uptrend, so now we'd expect the market to retrace down before putting in a new higher high again. As we see, the market has closed above our previous structure high, so our new high would now be the swing high after this break. And then as we see, it's going to be this one here, as again, middle wick is higher than the one on the left and the right. And our new market structure low will shift up to there, as that low created that high. And now again, so we're still expecting price to continue higher, as we're still in this uptrend. So here we see we've closed above our previous high, so our new market structure high would be the swing point after this. So this is going to be our new structure high, as this is the next swing point. Middle wick is the high, is higher than the one on the left and the right. So as we see, market structure high, market structure break. Again, we had a wick rejection of the high and it created this small reversal here. And now to find our new market structure low, just the low that created that high, which is going to be this swing low here. So that was the end of the lesson. I hope you guys found this useful. And then if you have any questions, you can just let me or Litz or CoinTrader know in the Discord server.